Zimbabwe cash crisis worse. Talking about Venezuela once again.
Systemic important banks. They removed the one factor called monetary awareness. Hey there, hope all is well. Back at you today with some more RTD news updates. As you can tell from today's title, the bond market says a recession is coming, but the Fed will end up cutting rates, as if that's a surprise. So today I have just one article I want to share with you in reference to the follow-up to this past week where we had a sudden drop in equities as well as the inversion of the yield curve for the bonds there. So it looks like now the mainstream news is coming out with what we've been talking about for quite some time now, that the economy has not been expanding as they would like for us to believe, that it's been slowing down for quite a while now. And so now that it's becoming mainstream news, now we have more economists and a variety of other people talking about now a recession is coming. But in actuality, in my opinion, the recession's been here for quite a while. Now it's just a matter of time before the markets officially react and investor sentiment as well as consumer confidence begins to reflect these concerns. So today I just have one article I'm going to scan through, but more importantly share with you my thoughts on the end. But before I dive into today's article, as always,
the numbers, they're pretty staggering. The vast majority of Americans have nothing put away at all for retirement.
Sometimes it's called retirement crisis, but people aren't doing well at all.
Has taken up the cause to rescue retirement.
For the first time since the 1940s, Americans are reaching retirement in worse financial shape than their parents.
This is not something that's going to happen next week or next month. We just don't have enough money.
So as I mentioned today, I have one article I want to share with you, and it's called Bond Market Says Not Only is a Recession Coming, but the Fed Will Cut Interest Rates to Stop It. So my goal is to thumb through it briefly, give you an idea what's on the surface. More importantly, feel free to scroll down below to find out more for yourself by reading the article directly. But just to scratch the surface a little bit here, it says the bond market doubled down on scary warnings Monday, signaling both a possible recession is looming and that the Fed could have to cut rates this year to stop it. So off rip, the very first paragraph, it paints the problem that we're possibly having as well as the solution in the same paragraph. It has to do with cutting rates. So we know a week ago, Jerome Powell mentioned that there's no foreseeable time frame this year, possibly next year, one hike. Here we have the news of the need to cut in case there's a recession. So in my opinion, it's good to say they will be cutting rates before they ever raise them again. Scroll down some more. It says, people are starting to get fearful, said Andrew Brenner of National Alliance. Quote, it won't last for long, but they're getting fearful about a recession. You had a Fed that changed course 180 degrees and then added to it last week that caught the market off guard. The disconnect between stocks and bonds was fairly dramatic Monday after the bond market flashed a recession warning on Friday. The Dow traded as much as 100 points on both sides, unchanged on Monday, but the bond market reflected a flight to safety trade. So one of the last news articles I did, I think it was last week, mentioned about how the trade of the century from a hedge fund company on the west coast of the United States of America, mentioning the importance of themselves getting out of stocks and buying what? Gold, as well as other precious metals. So I wonder if this safety trade has anything to do with holding actual tangible money in the form of metals. We'll see. Scroll down some more. At the same time, there was plenty of action in the Fed funds futures, where traders were betting on at least one 25 basis point cut from the Federal Reserve this year, more than 2 by next year. So already we have the people that's in the know hedging against the opportunity of making some money by betting against what the Fed might do. And as you can see here, the leading trade might be at least 1 basis point by this year and 2 points next year. So here's something worth thinking about. If you had a chance to get in on this type of trade, would you also bet that the Fed will be cutting rates? I sure know I would. It says on Friday, markets were spooked by the yield curve inverted, a reliable recession signal, though usually not an immediate one. So that means that the rate on the lower duration rose, a longer duration securities yield. So here we have a graph here showing the decline. And according to this graph here, wherever those yield curves met, there was immediately following a recession. If you look at the color graphs of this one, this is a semi-thin orange one. Then we have the 0809, which is a lot bigger. Imagine what this next one might be. It might be 2 times or maybe 3 times as big as this current one. Just something to think about. And then at the very end it says, quote, as recession signals become the flash and recession probabilities increase, I would expect market participants and people who deploy capital will become more cautious, and there's a risk that it's self-fulfilling prophecy. So this plays right into what I was mentioning earlier about the fact that not only have we been in a slowdown for a much longer period of time than they would want us to believe, but yet All the economic indicators in the past that have revealed that there's a slowdown usually takes time, several months before it actually becomes mainstream news. But as of right now, before we get to that point, here we have CNBC telling us that a recession is looming, giving us possible strategies as to what the Fed might do, which we all know the only thing it can do is cut rates and monetize. Hence the idea of probably more QE coming as well with these cuts here. And what most people don't think about, as this monetary policy is implemented, not only would our government respond with some type of fiscal policy of some nature, but at the end of the day, it all comes back to hurt you in your pockets where it matters most when it comes to all these things here being interconnected to the dollar. So this is what's happening in the news. As of now, the recession talk is official. We are currently in one. What I expect to happen is that in the next few months, they will definitely probably cut rates and then look to implement some type of stimulus. And that stimulus right there will be the beginning of the end, in my opinion, of this current monetary paradigm that we're in. Now it's just a matter of how our trade partners as well as our allies might respond as their economies continue to slow down, as well as their need to monetize and to create more debt to prop up their markets. But other than that, I would love to hear your thoughts on this matter. Where is this heading? If you could place a bet that they're going to cut rates in the next 3, 6, 9 months, where do you fall in at? I'm curious to find out. Leave a comment down below. More importantly, if you've enjoyed this, give it a thumbs up. Don't be afraid to share it. Look forward to bringing you more news. Enjoy your day.